Gold versus real estate. Which is better?
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Gold versus real estate. You know, I get questions all the time on this channel saying, Kris, what about gold? What about real estate? And you know, there's a lot of misperception about what the difference is between the two of them. Today, I'm gonna actually do a super fair, simple assessment about what is gold, what is real estate, and how do they compare to each other, because the truth is they both have strong merit, but there are weaknesses to both gold and real estate, and today I'm gonna help you understand that. Let's start with gold 101. What do you need to know about gold? Number one, gold tends to beat inflation. Well, you know what inflation is, right? It's when the value of your purchase power goes up over time, but the value of the almighty dollar becomes less almighty. It goes down in value. In fact, every year, this $100 bill goes down about 3%. So next year, it'll actually be worth $97. The year after, it'll have about $94 of purchasing power. And with time, it goes down. Gold does not. Its value outpaces that 3% and it goes up in value. That's a good thing. Investopedia recently put out an article asking the question, does it still make sense to invest in gold?
I love gold.
And the article says this, in the early 1970s, 1 ounce of gold equaled $35. Now, if you had an ounce of gold today and converted it into today's prices, it would still be enough to buy a brand new suit, a lot more than that $35. Bottom line, gold keeps going up in value. And you know why? They're not really making more of it. We still might be able to mine it. We still might be able to find it on the planet. But when we need more of this, guess what we do? We push a button and we just print more of it. Number two, gold never goes out of style. That means that through all ages of time, currencies have come and gone, but today people still value gold universally. The third benefit is that you need to pay a $1,400 per ounce today, and the dealer has a 5 to 6% markup on top of that, which means that it's more expensive today than it was a decade ago, and guess what? It's gonna keep going up in value. There are some big buts, however.
I like big butts and I cannot lie.
For example, you can only make money on gold when it goes up in value. So if I bought it today for $1,400 an ounce, and then 2 years from now it was still $1,400 an ounce, I could get my money back. I'd have to subtract my dealer fees. I might technically lose money. The only way to really make money is I have to hold it long enough for it to go up in value. And let's not forget that you actually can't transact with gold. I can't go into a store, right? It's basically dead weight until you sell it. It's purely an investment. Now I gotta tell you, I have a ton of investors that have a lot of money in gold. Gold is actually a really important part of their investment strategy. And my experience is that people hold on to gold kind of like they do food storage. It's bomb shelter thinking. It's apocalyptic. It's end of the world. And if you were thinking, Kris, how do I get my hands on gold? How do I exchange some of this for some of that? Well, you can buy it on the gold futures market. You can buy gold coins, gold companies, gold ETFs, gold mutual funds, gold bullion, gold jewelry. Bottom line is gold is everywhere and it's pretty easy to get your hands on it. Now, before I can do a really fair, just comparison of gold versus real estate, let me give you a lesson in real estate 101. It takes money to get in the game of real estate. Now, often on a property, you have to put at least 20% down payment, which means if you're talking about a $300,000 home, you got to put $60,000 down. But there's also lease options and other ways to get into real estate that take very little money, like what I teach about here in my book. One of the things I love about real estate is that it produces cash flow if you buy it the right way. If you're gonna buy it and hold it, someone else is gonna live in it, and there should be some leftover money at the end of the month after you've covered all your expenses like your mortgage and your utilities. And guess what? That cash flow can stack up with each and every home that you add to your personal portfolio. And guess what Mark Twain said? He said, they're not making any more dirt, so you might as well buy up as much real estate as you can get your hands on. Now, like gold, real estate appreciates in value. That means that over time, it naturally increases. Versus the dollar that goes down in value, gold and real estate, they share that in common. And let's not forget the major tax benefits that real estate provides. My first several years as a brand new investor, going from making very little money to a lot of money, I went 7 years without owing any money in taxes because real estate is littered with all of these incredible tax benefits. So let's ask this question. What can you actually do with gold? Well, you can buy jewelry, electronics, you could do dentistry, meaning there is some practical application of things that you can do with it. Here's the other question though. What can you actually do with real estate? Check out this versatility. I can use it as a primary residence, a home for other people, an office space, an event space, luxury travel, storage accommodations. Real estate has some massive levels of diversity and it comes in all shapes, forms, and sizes. People have been arguing with me for years, Kris, what is better, gold or real estate? And we're gonna end it right now by playing a game. What's better, real estate or gold? And we're gonna judge it based on 6 criteria. We're gonna compare gold against real estate based on size of investment, length of the hold, earnings potential, how liquid or easy it is to cash in, volatility, and finally, tax benefits. Are you ready to play? First, let's talk about size of the investment. We know that real estate can cost $40,000, $50,000, $100,000 to buy, or you might be able to get in with as little as $1,000 or $5,000 if you read my book. But you see, gold, it's a different story. I could buy $100 of gold. I could technically buy $10 of gold. I don't really know how to buy $10 of real estate. So when it comes to gold versus real estate, gold is the winner and real estate loses this first match. Number 2, length of hold. This one is tricky because with gold, guess what? I could buy it today and I could sell it tomorrow. There's a lot of volatility in the market, but technically I could liquidate that investment and get my cash back. Real estate, if I bought it today, could I put it on the market and guarantee to have it sold tomorrow? I could not. And so for that reason, gold is the winner and real estate loses again. The third one, earning potential. Which one of these is going to make me more money? I'm going to tell you right now, historically speaking, when it comes to the great battle between gold and real estate, time and time again, over the years, guess who wins? Real estate wins over and over and over again. Real estate is where you're going to take home the earnings on so many different levels, tax benefits, cash flow, while gold's giving you none. Appreciation. Real estate is also going to appreciate bigger than gold. Number 4, liquidity, meaning what does it take for me to convert my asset into cash? I've got gold. How quickly can I turn it into cash? I've got real estate. How quickly can I turn it into cash? And the winner is going to be gold. Number 5, volatility. Gold goes up and down in value literally from day to day. Does real estate go up and down in value every single day? No. Every single month? No. Every single year? Real estate is actually very predictable. It's on a curve that moves very, very slow and very predictably, which means that it's all based on supply and demand. You actually know generally the direction that real estate is going based on the information of supply and demand. So when it comes to volatility, gold is the loser. Real estate is most definitely the more predictable winner. See how we're stacked up so far. We've got 3 check marks for gold. We only have 2 for real estate. And here's the last question. Tax benefits. Do I get tax benefits from gold? Nope. But do I from real estate? Yes, all day long, and they stack up. So, ding, 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 ding. Real estate is the winner when it comes to tax benefits. We've got 3 check marks on either side. What's the takeaway? So, my friend, which one is better? I'm going to tell you right now, depends on what you value. With gold, if you value the size of investment, the length of the hold, and the liquidity, then gold might be the key for you. However, if you value earning potential and having less risk and volatility and greater tax benefits, it's going to be real estate. At the end of the day, there truly are merits to both. But when I compare my real estate holding to my precious metals, guess what I own a lot more of? The stuff that makes me money, tangible, cash on hand that I can spend. Besides, I love those tax benefits and the growth. Honestly, I think that's all you need to know about gold. But when it comes to the real estate journey, there's a lot more knowledge and information. There's a lot more to learn. More importantly, if you've got money that you want to sink into the game of real estate and you're wondering how to do that, I want you to understand that every single month I find between 10 and 15 properties that I desperately want to buy because I'm making a 25% ROI. But guess what? I've run out of money because I'm already buying every month so much real estate. So here's what I'm doing. To buy the rest of the real estate, I take on a handful of partners that will actually join up with me 50-50 and we'll go out and buy some real estate together. If you've got money sitting in gold, 401ks, IRAs, the stock market, equity in your home, and you're not actually making cash in hand on that, I want to invite you to click the link below and actually get a chance to talk to my team about partnering with me, where we will share with you my track record on my last 4,000 homes and how much money you could actually be earning compared to gold, 401ks, IRAs, or any of those other investments. Because hands down, when you compare 25% ROI to a typical 6% yield over 20 years, you're gonna make 25 times more money. Now, if you wanna make those kind of returns, click the link below, jam with my team, and find out if I have one of my coveted partnering spots available for you.